Today's video we will discuss my favorite indicators, what they are, and how I use them. But before we get into that, we have to go over my weekly portfolio and cover my wins and my losses and some hard lessons I have learned this week. I believe you will get a ton of good info from this video, and if you feel the same, please like and subscribe. And with that, let's cue the intro. If you want to skip to the video topic, I provided a timestamp below as well as others in the description. We only had a 2% increase, which is a lot lower than I was hoping for. We have $995,000 until we reach our $1 million goal. Now let's get into the positions I had this week. Our biggest winners this week was Tesla, Amazon, Netflix, and Beyond Burger. I also want to share with you two of my worst picks this week, which is SQ and MU. This week we saw Amazon pass through the SMA line with this green candlestick right here. We then saw a massive increase to a height of 9%, which it created a new 52-week high, and then we saw some pullback right over here to 7.45%. Same thing was Tesla, entered about here, and we saw a massive increase over the past 6 days in Tesla stock. So you may notice, with all these big gains, why was the portfolio only 2%? You may be asking. Well, I learned two hard lessons this week. Well, the first hard lesson is there was too much diversity. Not that diversity, you bigot. There's too many stocks in my portfolio. At one point, there was 17 stocks, and instead I should have focused on 5 stocks. If I would have focused on Tesla, Amazon, Netflix, Beyond Burger, and say Microsoft, which I also had, which was about a 4% increase, or 4% profit, I would have about, depending on the allocation, about 7 to 9% of growth this week instead of 2%. Too much diversity can be a bad thing. For example, if you have $2,000 worth of stock in 20 different stocks, and let's say there's $100 in each stock, say for example Amazon, Tesla, and many others, you would get very minimal growth if say Amazon and Tesla grew exponentially, but the others only grew 2 to 3%. Now moving on to lesson number 2, flukes and a stupid purchase. So starting out with MU, I bought at around $50.50. It beat expectations and had a positive cash flow despite the COVID crisis. However, the increase stopped at about $52.50, which was surprising, and then it had a hard dip after that, despite beating earnings and having a positive cash flow. Sometimes when this happens, it doesn't make any sense, but that's why you diversify, as long as you don't diversify too much, as in referring to lesson 1. Now let's move on to my stupid purchase of the week, SQ. And you may say, but cash gains, it went up 10%. How did you screw that up? And I would say yes, but I bought it at the top of an upwards trend because I got the case of the FOMO. So if we look over here at SQ, right around here would have been a good purchase indicator. It passed through the SMA line. The EMA lines are in the correct order. Strong MACD, strong RSI, strong Stochastic. Over here would have been the best point to buy the stock. However, I bought way at the very top. And what I didn't look at was that this was around the 52-week high. And generally, you want to stay away from the 52-week high, especially during an uptrend like this. So I hope you guys know that I want to show you my mistakes and not just my successes. So hopefully you don't make the same mistakes. And like Yoda said, failure is the best teacher. Now it's time to move on to my favorite indicators. And in case anyone was wondering, I am using TradingView for my technical chart analysis. I highly recommend it. Now, let's start off with the RSI. The RSI is a relative strength index, is a momentum indicator used to measure the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of an asset. So we're going to look at Bitcoin for an example of the RSI. When the RSI line is below this dotted line here, which is considered the 30 mark, it is considered oversold. As you can see right here, this would indicate that Bitcoin at this time was oversold. And when it's above this line here, the 70-point line, that means it is overbought. Now you have to be careful with this indicator. When I first started out, I would buy Bitcoin and other stocks using just the RSI and MACD, but the problem with that is you can see it's oversold right here, so you would buy right here. However, it keeps dipping down despite being oversold. So you have to be aware of that. That's why you use multiple indicators, not just one or two. Now, moving on to the MACD. The MACD is the moving average convergence divergence, is a trend following momentum indicator that shows the relationship between the two moving averages of a security's price. We're going to go ahead and look at the MACD on Amazon. These two lines are the moving averages, two different moving averages, and it's meant, as stated before, to see where the momentum of that asset is going towards. So if it's going up, that means the price action is going up. If it's going down, the price action is also going down. When the red line is dominating over the blue line, that means that the price action is decreasing and the momentum is going downwards. When the blue line and the red line cross and the blue line is in an upwards direction, that is called convergence. So you can see a little bit of that right here. You can see it better right here. These little bars you see here, this histogram, is indicating the strength of that momentum. When it becomes lighter, that means the momentum is dying down a little bit, but that does not necessarily mean it's going to die off completely yet. As you can see here again, right here, it goes back up, and you can see that in these bars as well up here. But then it starts to die down a little bit, as you can see, as it gets lighter and lighter, and eventually it becomes red, and then there's a downwards projection. Now let's talk about the stochastic. The stochastic is an indicator that measures the relationship between an issue's closing price and its price range over a predetermined period of time. So when we see these two lines cross each other, and the blue line is dominating the red line, that is also called convergence, just like in the MACD. The blue line going up and dominating the red line means that the price action closing price is increasing. So these candlesticks up here, their price action, closing price action is increasing. As you can see, it gets higher and higher, as does the blue line. And whenever it starts to mesh together, that means there's a little bit of a plateau. And then you can see here the price action, closing price continues to increase. And vice versa, when the red line starts to dominate the blue line, that means that the closing price is now becoming lower and lower and lower. As you can see again here, these red candlesticks are showing that the price action is becoming lower and lower and lower. Now, let's talk about the EMA. The EMA is an exponential moving average, is a moving average that places a greater weight and significance on the most recent data points. It reacts more significantly to recent price changes than a simple moving average. But I'm going to talk about what I use the EMAs for. I use the 20, 50, 100, and 200. And what this does is tells me if the market for a specific stock or asset is in an upwards direction or downwards direction. So for example, the red line is the 20, yellow is the 50, the aqua is the 100, and the blue is the 200. When they are in this order, that means that the market is uptrending. And if we look over here at Bitcoin, we can see that the EMAs are an inverse of what we just saw on Amazon. The red line here is at the bottom, and the blue line is at the top, and the aqua and the yellow line are also in the downwards projection. What that means is Bitcoin is going to have a much harder time breaking to the upside due to these EMA lines being in a downwards trajectory. Now last but certainly not least is the SMA. The SMA is a simple moving average, calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. Now what I use the SMA for is an indicator on whether I should buy into an upwards trend into a stock or cryptocurrency. Here we're going to look at Netflix on June 16th. Here, a green candlestick broke through the purple SMA line and then had an upwards trajectory. There was a couple of red candlesticks that touched the SMA, but the SMA, as you can see, was used as a line of support. It continued upward until finally it broke through the SMA and there was a slight downtrend, especially a downtrend right here. So let's bring all the indicators together in one real life example, and we're going to look again at Amazon. Now if you see here, a green candlestick broke through the purple SMA line right here. However, this is what we call a fake out because then it went to a downtrend, or mostly it went to a sideways position and not going up to the uptrend. However, if you look closer, you will see that the 50 EMA line is above the red EMA line right over here. So this does not mean that the uptrend won't happen, it just means that there's a slightly higher risk of it getting rejected. And as you can see, it got rejected at the yellow 50 EMA line. However, eventually it did break through over here and there was a slight uptrend. Now, just because there is a breakthrough and it looks like there's an uptrend, that does not mean that the uptrend will be a big one. For example, this only went to about 3%. The height was around 3.5%. So it was a very small breakout over a 6-day period. If we look over at this time period, starting around June 4th, a green candlestick broke through the SMA and had an upwards trend. And if we look over here at the indicators, we can see a bullish cross or a convergence right here on the MACD, along with green histogram continually going up, along with the blue EMA line also increasing. You see that the RSI was low over here and was in a bullish area here, and then eventually got into the oversold category over here. You also saw that the stochastic was reading higher and higher price action closing right here. And then eventually when this happens, it will plateau, as you see here, and eventually go down, as you see the downtrend started right over around here. Now notice I put these white lines here to indicate that each of these indicators tell you to sell at different points. They all won't tell you to sell at the same time. The red candlestick up here broke through the SMA line. However, we saw a divergence a little sooner on the MACD. The RSI went from overbought into the 70 range, as you can see here. There was also a divergence on the stochastic right around here. So that about wraps up my favorite indicators. There are tons of indicators like volume, parabolic, and VWAP, and you don't have to use the ones that I do. You use the ones, or you should use the ones that work best for you. I hope this video was informational for you, and if so, please like and subscribe, and be sure to hit that notification button to be alerted of my weekly videos. Next week's video will be about spotting upwards and downwards trends and when to enter and exit. I highly suggest you look out for that video next week, and I think it would be a great benefit for you to watch it. Thank you for watching, and have a great week, and go get those gains.